Good morning. This is Wall and Broad. We're going to get to the headlines later. For now, we're just going to jump right into those non-farm payroll reports. The total non-farm payroll employment rose by 203,000 for November, and the unemployment rate declined from 7.3% to 7.0%. The average work week increased by 0.1 hours to 34 and a half hours a week, and the average hourly earnings jumped by 4 cents to $24.15. Over the year, the average hourly earnings have risen by 48 cents or 2%. Now, the initial reaction to the stock market for the report has been to the upside. Joining me now is Doug Roberts. He's the chief strategist for Capital Channel Research. So, Doug, we saw increases in jobs across the board, with really the only exception being the government, where we saw losses.
That's correct, Deborah. And that's why I think you saw really the uptick in the market. Really, the market is dependent upon the Fed and basically quantitative easing. Every time there's talk of tapering, the market backs off. So incredibly, as you pointed out, when things are bad, it takes tapering off the table and the market goes up. When things are normally good, they start factoring in tapering and the market goes down. The reason why I think it went up this morning is, as you pointed out, basically government workers going back to work is a one-time event and unlikely to be hopefully not repeated. So therefore, they're discounting this as a one-time event, not the basis of a new trend, and they're looking at the private numbers, which, although they weren't bad, they were slightly less than expectations. So given the relatively dovish nature of the Fed chairman-elect, Janet Yellen, they don't think tapering, although there may be discussion, serious tapering is not on the horizon for at least several months, or unless the reports start to improve substantially.
Now, Doug, there's been so much focus on the labor participation rate. Last month, that's all everyone talked about. This month, it was basically unchanged. Now, how much of this is really due to people entering retirement? Because that's what I'm hearing now, is that studies are saying that the reason the participation is lower is that so many people are going into retirement. I mean, baby boomers are aging.
Ultimately, that may be true, but really, if you go into retirement, there have also been studies that have shown that really people have not saved anywhere close to what they need to retire comfortably. So what you may have is a dual effect. It may be partially an explanation for the lower labor participation rate, but what you may have is people kind of working part-time, some of them on the books, some of them off the books, to kind of supplement their income, and they're perfectly happy with that. But it does act as an overhang for, let's say, the difference between the adult unemployment rates and the teenage, or basically younger unemployment rates, which are still substantially quite high. For instance, if you're a business, you can choose somebody who maybe already has everything in place, is just looking for supplementing their income, is not looking for a raise, but wants labor flexibility, a limited number of hours, versus a new hire you're going to have to train, who eventually may want to start a family and have a raise. You're going to probably hire the older, more experienced person, which will act as an overhang and maybe partially also the explanation for why you're not seeing really a substantial decrease in the unemployment rate for kind of younger people entering the labor force.
All right, thanks, Doug. It looks like it is going to be a huge day for equity stocks because we are already really high on the upside. Let's go to today's other headlines. Well, it's looking ugly for retailers today. Ulta Cosmetics continues to sell off, down 18% after the makeup chain guided down for the fourth quarter estimates. Instead of the expected $1.24, it's going to be closer to $1.07 to $1.10. American Eagle's also getting beat up like all the other teen retailers. It missed its earnings estimate for the quarter and gave a dismal outlook for the holiday season. And Five Below is plunging 10%. After disappointing shareholders, it beat earnings estimates by a penny but missed on revenue, and then they too guided down for the holidays. And that's it for Wall and Broad. Good luck trading, everyone.